Welcome to today's explainer. We're dropping straight into what looks like an epic, high-stakes battle playing out on the charts for July 5th, 2026. Picture this in smooth vector animation and vibrant comic book colors. On one side, you have a valiant market recovery trying to slash through resistance, and on the other, massive underlying economic threats just waiting in the shadows. Let's get right into it.
Okay, let's dive into this. Right now, the crypto fear and greed index is sitting at 11. That's flashing in neon comic book red, signaling severe extreme fear. But there is a massive disconnect here, guys, because if you just glance at the recent price action, we're actually seeing a ton of green on the board.
And that brings us to the ultimate mystery we're unpacking in this explainer. With Bitcoin successfully reclaiming the $63,000 level, why on earth is the market still trapped in this state of extreme fear? We're going to break down the conflict between the surface-level recovery we're seeing and the hidden dangers that are lurking deep in the data. Chapter 1, a tentative market recovery. Let's rapid-fire through this stat attack. We've got Bitcoin trading around $62,754, up about 0.5%, having briefly pierced that 63K armor earlier in the day. Ethereum is holding steady with modest gains around 1757. Then, we've got some explosive side characters entering the fray. Cardano is our coin of the day, up over 5%, and Ultima? It's absolutely surging as the top gainer with a massive 19% spike. I mean, at first glance, these numbers look like an absolute victory lap for the crypto bulls.
Chapter 2, the thin liquidity illusion.
Here's the catch, though. We're currently right in the middle of the U.S. Independence Day holiday weekend, and that creates a highly deceptive battlefield known as thin liquidity. This is a market condition with exceptionally low trading volume. Basically, when volume is this low, even a moderate amount of buying can create an outsized, exaggerated, and honestly, potentially fake effect on the price. So what we're seeing on the charts right now, it might not be true strength. It could literally just be an illusion.
Now, what's really interesting about this is the specific warning market analysts are issuing. They say, what is gained in thin hours can be quickly taken back once full market liquidity returns. This perfectly highlights just how fragile Bitcoin's 63K reclaim actually is. Our hero might just be swinging at shadows right now, entirely vulnerable to a massive counterattack the second the holiday ends.
Chapter 3, Institutional Tides and ETF Flows. Talk about a classic David versus Goliath setup. Look at this. In June, we saw a bruising $4.5 billion exit the market through spot ETF outflows. That is Goliath. Now, on the flip side, we have David, a single-day inflow on July 2nd of just $221.7 million, led primarily by Fidelity's FBTC. Like, yeah, it's a nice change of pace for sure, but the sheer size difference here is staggering.
Analysts are highly skeptical, and honestly, this sums it up perfectly. One single green ETF day does not cancel out a month of massive redemptions. Seriously, don't be fooled by what might just be a one-off institutional rebalance. The smart money is sitting on the sidelines right now, waiting to see if this is a real trend or just a blip on the radar.
Chapter 4, Looming Altcoin Token Unlocks. Let's run through the next major threat on our radar. Over the coming week, the market is facing a massive $125 million flood of new tokens hitting the circulating supply from projects like Pump, Hype, and Aptos. This introduces immediate, heavy sell pressure. It's basically a massive headwind actively trying to blow our altcoin recovery completely off course. Chapter 5, Shifting Global Regulatory Winds.
And this brilliantly illustrates how the regulatory landscape in the US is rapidly evolving. On one hand, you have former President Trump actively opposing taxing Bitcoin for payments, arguing it shouldn't trigger capital gains. And at the exact same time, the SEC is shifting its own stance. They're actually acknowledging past mistakes with crypto ETFs and promising a new neutral framework that could pave the way for prediction markets and leveraged funds. Obviously, we aren't taking any political sides here, but strictly analyzing the data, this dual narrative points to a potential and very powerful thaw in US regulatory hostility.
But while the U.S. narrative might be softening, global oversight is absolutely tightening its grip. Just look at these enforcement actions. South Africa's Revenue Service just launched a brand new crypto audit unit targeting 6 million users. Meanwhile, police in Brazil just dismantled a staggering $2 billion crypto money laundering network linked to organized crime. The regulatory net is being cast wider and pulled a lot tighter all around the world. Chapter 6, Watching the Support Levels. So the crucial point is, how do we actually confirm a true trend reversal? Well, Bitcoin has to achieve these three technical benchmarks. 1. We need to see 3 to 5 consecutive days of broad ETF inflows, not just a random single-day spike. 2. It has to hold that $60,000 to $61,000 support range during regular, high-volume U.S. trading hours. And 3. It absolutely must avoid retesting that 58K reference low we saw back in late June. If it fails these tests, the recovery was probably just a thin liquidity mirage.
With all these massive forces at play, analysts are viewing this 63K reclaim with intense skepticism. You see, because this bounce kicked off during that Thing holiday liquidity, a moderate amount of buying can lead to cleaner but potentially fake candles on the charts. It's kind of like scoring a goal when the opposing team's defense hasn't even walked onto the field yet.
Which leaves us with the ultimate cliffhanger for today's explainer. When the holiday ends and full, heavy liquidity returns to the battlefield on Monday, will Bitcoin's $63,000 shield actually hold firm against the selling pressure? Or is that persistent extreme fear going to drag us right back down into the abyss? Keep your eyes closely on those support levels, keep tracking the data, and we'll see exactly how this epic clash resolves. Thanks so much for hanging out with me for this explainer. I'll catch you in the next one.